Hey everybody, Jason here. Happy Tuesday. Hope you guys are having a great day. Hope you're enjoying a more flat day, a little greenness since yesterday. Yesterday did turn out to be a major overreaction. I have a lot of thoughts on yesterday and all what played into that. On some level, I feel like the market's almost acting like the vaccine doesn't exist, and in certain areas of the world and certain pockets, I believe it does not exist. Some people are scared of it, and if they're scared of it, most likely they're influenced by the people around them, and vice versa. And those pockets of people collectively don't get vaccinated, and then once it enters, that group of people is propagated throughout because nobody wants to get vaccinated and nobody's being extra safe, and that's why we're having that little bump. We have bonds go up, so all that kind of culmination of thing, but no one big catalyst for yesterday, which is why I believed it was an overreaction. And that is a big part of looking at news and deciding whether or not you think it is something that should affect the market overall, or if it's just something temporary like it was yesterday. And that's not to say we can't have major movements, in the next few days, but who knows? I think we're kind of on pins and needles here, waiting for the next thing to happen and then react accordingly. But overall, I think we're pretty positive. I don't think any of that news was bad enough to say the economy is coming to a grinding halt. What we do have coming in the very near term is a lot of earnings. So, speaking of earnings, this is the one thing I wanted to talk about. Expected move on underlyings. And I think this could be very helpful. And what I'm going to look at is this Netflix here. This Iron Condor that I had sold, I got $190 credit for it originally. I opened this up when Netflix was up a bit, expecting a pullback. And my thought behind that, if I look at this over the past year, I mean, what a picture perfect barcode, right? I mean, lows have stayed the lows, boom, boom, boom. Highs have pretty much stayed the highs throughout. And I think we were on, what was this guy? I mean, it was like, I believe it was up here when I opened it up. So we came back about $20. That's why I sold the call side a little bit closer to the money. So I wanted to stay pretty much in that broader range there when I open this up. But we are coming into earnings. So this is when we can expect the biggest move, barring maybe some news that comes out that really changes the fundamentals of a company. Earnings is the next biggest thing that should change the underlying price. Now, when we're looking at this and we have our strike prices, they're about $50 in either direction. So is that good or bad? Well, the only thing we can take a look at, we could take a look at earnings history, see how it's moved, but we can also take a look at something that is right in front of our face and very simple to see, even when we're on a mobile platform like Robinhood. On Thinkorswim, it's available. You can look at just what expected move is. But for us, what we're going to do is we will go to the option chain and we'll grab the nearest date, and we'll find the call or put, doesn't really matter. The market is not directionally biased. So 134 is the current mark on it. 534, 535, so pretty close there. And this is our expected move, about $15, $14.83. We can take a look at the same side. Same thing to the put side. So this is still, again, our closest strike price, the 535, so 15 and a half. So we're looking at the market expecting a $15 move. Now, relative to our strike prices, which are at least $45 away, that is 3 times the expected move. So in my case, I'm going to consider that this Iron Condor that I have on Netflix is in a good position. And you can take a look at this for absolutely anything. And keep in mind also, because we're coming in earnings, not only do I know that, you know that, the whole market knows it. This is when all of this money is going to be at a premium. So if you were to sell something pretty close to the money, as soon as earnings is done, all those prices are going to come down. That's what we call IV crush, because we don't expect it to move. So all that premium is going to go way down. because right after earnings, so we know tonight will be, or after hours will be a big move, and then Thursday or Friday it's not going to move like that anymore because there's not any huge catalyst coming out, which earnings is. And you can do this on absolutely any stock at all. You can look at the indexes like this. So if we grabbed and we took a look at, like, for example, the SPY, and you're curious what the expected move is, you can grab the next strike price, so tomorrow, and you can see what this move is. So we just look at 531.74. This is the closest one. So the expected move is $1.50, and you can look in both directions. So yeah, $1.50-ish. We can look at, which I haven't, just curious. Let's see what Tesla's expected move is. So by the end of the week, obviously a very, very, very volatile stock. Get down to the puts. So 653, closest one here. The built-in expected move, only $10. That's actually pretty cheap. And so that's in just a few more days. Just a $10 move is expected. If you look in the following week, you can also see what the expected move is for in that case. But since Netflix, we know earnings is coming out tonight, that's the closest we can do. So coming into the end of next week, you can always see whatever is close. That is your expected move. So that is all that expected move. That's all your extrinsic value. Because at this point, like if you purchased the call above the strike price, there's absolutely no intrinsic value, meaning that is all extrinsic value, and extrinsic value is just time and expected move. So that's all that is, those two factors. So if you've never seen that, never thought through it a little bit, hopefully that is helpful. Today, the rest of the day, I don't think I'm going to be making any moves, just hanging out. Give us some buffer. Give us some more buffer for our, hey, what is that? Give us some more buffer for Tesla's earnings coming up here. The only thing I have to the high side is I did sell some calls, some $800 calls on my shares. And other than that, we have tons of put credit spreads. And then we have these three guys, which are a combination of butterflies and an iron condor. And these just we need another couple days for these to be profitable. For anything at least meaningful, these are all very small plays, and they can turn into large amounts of money. But the most important aspect of them is just going to be the decay on these. So, and then today, the only other things I did, I can't even remember because I've recorded this a couple times. I did buy another $20 leaps on Palantir. So I have 4 of those now. I only need, and I bought 25 more shares just because I'm working towards obtaining 1,000 shares, and then I'll be good on Palantir. But because it's dropped a little bit, I thought that was a good advantage. Buy some shares and average down on those calls. All right, guys. Hope you guys have a great day. Let's make a lot of money.